Everyone, and welcome to the fourth webinar of the Seamless Middle East webinar series. So today we have a 60-minute panel discussion entitled Strategic Digital Banking Plan 2020, Is it time to hit reset? We're lucky to be joined by 4 industry experts on the panel who've kindly agreed to share their insights as we discuss how digital strategies have been turned on their head in 2020. Our panelists today are Danay, who is the Chief Financial Officer for Commercial Bank International, Ashley Booth, who is the Senior Vice President, Head of HR and Transformation at Noor Bank, Konstantinos, who is the Chief Transformation Officer for WEMA Bank, and Mohsen Malaki, who is the Founding Partner and Managing Director of Synergy Consulting Group. Mohsen's going to be moderating the session for us today. So in a moment, I'd like to hand over to Mohsen so that we can get started. Can I ask all panelists to turn on their webcams and microphones? And whilst everyone does that, please can I just remind all webinar attendees that you can ask questions throughout the panel discussion, and our panelists will do their best to answer them. So without further ado, Mohsen, I'd like to hand over to you.
Thank you, Julie. So good morning or good afternoon to everybody, depending on where you're calling in from. My name is Mohsen Malaki from Synergy Consulting Group. This panel is hopefully an hour-long panel, and we'll try to delve into the topic of digital banking and your strategic plan 2020. Is it really flipped on its head now after this pandemic and the shocks that it's created in the industry and in most industries? So before we proceed into the panel itself, maybe I'll do a quick introduction. So the topic is banking, financial services institutions across the globe are entering basically 2020 with a solid strategic plan and vision for the year. COVID-19 took the industry by surprise. I'm sure every single industry is the same. And rendered basically your existing plans for any transformation or any strategy essentially irrelevant or at least radically changed. So what we want to discuss in this panel is what are the major changes we've seen in your strategic plans, and how have they been impacted by COVID-19 and the aftermath of COVID-19. So maybe I'll give a minute or two for each of the panelists to introduce themselves very briefly in terms of their experience and the companies they work for. So Danay, Chief Financial Officer, Commercial Bank International, maybe you have a minute to introduce yourself.
Sure, thank you very much. So Danay, CFO of CBI, and we are primarily a corporate bank with a retail function within the bank as well. The bank has been around for 26 years. Obviously, I haven't been with the bank for that long. I've been with the bank since the beginning of last year. And prior to that, I had spent around about 12 years working across Asia Pacific, for an Australian bank called ANZ primarily, and I was based in Singapore and Hong Kong, but always in regional roles and regional functions across Asia. So obviously the bank itself, CBI, is it's in a challenging situation, which I'm sure that we'll get into throughout the course of this discussion today. And it's also the same sorts of challenges that are felt by many of our banking peers, and I'm looking forward to the opportunity to having that discussion today. Okay,
great. And actually, it's I think a very good and relevant perspective on the corporate banking side, because those clients are typically the last to adopt a lot of these digital tools and channels. So it'll be interesting to see how your customers basically change their behavior if they have after the pandemic. Konstantinos, Tsanis, the Chief Transformation Officer of WEMA Bank. Maybe you can give a quick 1-2 minute introduction of yourself. I think we've met before in another Seamless event as well, so yeah. I know you quite well.
Yeah, thank you, Mohsen. Indeed, we met in Kenya last September, I think.
Yeah.
So yes, I'm Dr. Konstantinos Tsanis, and having spent a few years working on digital transformations within the Middle East, I now focus the last couple of years in having launched the first digital bank in Africa. Similar to Danay's situation, it used to be a corporate bank that launched now a retail arm. The digital challenges are very interesting. And in our expansion, we are also expanding in the UAE for trade finance and for high net worth individuals as well. So that's my background.
Okay, great. Another corporate banking parent company, I assume, that is launching a digital-only bank on the retail side.
Exactly.
So that would be a good perspective to have as well. Third, Ashley Boots, Senior Vice President, Head of HR Operations and Transformation at Noor Bank. Noor Bank is based in the UAE. Maybe you can give a quick introduction of yourself and your bank.
Sure, thank you. It looks like I'm the people person on the panel. I actually started the first 10 years of my career in finance and saw a bunch of changes that I don't think went as well as they could have, and often at the expense of people. And that's what got me into HR, particularly around transformation. And coincidentally, in the last several years, it's just ended up in digital transformation. And I started my banking career, or HR career in banking, at Barclays in the region, and a couple of years back joined the leadership team at Noor Bank to help with their transformation. That was up until the beginning of this year, once it was acquired by Dubai Islamic Bank. So a lot of what I've been looking at and what I hope to bring today is specifically around the people side of transformation.
Great. All right, good. So we have a quite diverse, I think, view, and for any strategy and any strategic plan, well, at the very least, for any digital transformation, the people aspect, the cultural aspect, and the organizational aspect are fundamental to any change in the organization. So it'd be good to have that perspective as well. So a bit about myself, Mohsen Malaki, Synergy Consulting. What we do is we're management consultants, and so I wasn't even sure if some of you guys have touched on corporate banking, but several of our clients have been corporate banks and retail banks, so we're quite familiar with the challenges of developing and implementing digital transformations and within the banking environment. So maybe I'll give a quick background of what challenge the banking industry is facing now, and the changes we've seen, I think, over the past very, very fast couple of months, and then try to see what each of you have faced, or the challenges, whether you faced these, whether you had unique situations, as well as how you address those within your overall long-term strategic plan. What has changed? What has remained the same? What has been sped up and made more urgent based on the experiences we've all had in the past couple of months? So based on my discussions with our banking clients, and in fact, this is not just for banking, but also for our telco clients as well, customer behavior has really, what we thought, what our clients thought customers would do or be trained to do or learn to do over a period of a decade has essentially happened in a matter of 2 months. So what I'm hearing are, even my own experience, my father is over 78 years old, and he's now transacting with his bank on the mobile app. I never thought that someone who's 78 years old, the only thing he knew how to do on his mobile was to use WhatsApp. And now he's able to actually conduct transactions, money transfers, checking his account, and payments on a mobile app of a bank. And in fact, he's so well versed now that he's complaining about missing features. So one of the things that I've noticed are segments of the customer base that were traditionally very averse to digital channels. So we used to have what we call digital natives, and they were the ones that were the first sort of spearhead of any digital effort that we had. It's now become very rapidly, within a period of a couple of months, a bigger chunk of the customer base that are seeking digital channels and digital interactions with the bank. Second is, I think, another surprise to me was corporate banking customers who are obviously, for obvious reasons, not able to have actual in-person meetings, doing a lot of their transactions via Zoom video and Microsoft Teams with their banks. And in a lot of cases, they're complaining that maybe many of the features that they thought should have been available on digital channels are not. So there's a lot of demand now coming towards the bank to speed up a lot of the activities that they had maybe planned over a series of several years. Second is, and this is, I think, very relevant for Ashley, and I think maybe others would be able to contribute to this as well. Employees, after the crisis, employees are, well, for obvious reasons, work from home has been a major feature of the pandemic. But what I've heard is a lot of employees are feeling very comfortable working from home, and not just because of the ease, but they're actually becoming even more productive in some cases. So aside from the fact of not being stuck in traffic, going to work and coming back and all that time saved, but even the meetings are much more efficient. So before, you would have meetings where it would take hours to organize. People would, physically need to be in that meeting. Then people would fidget around the coffee stand or different, and it was just an inefficient process. But now you literally have people just come to the Zoom, sit in the Zoom, have their discussion. No one wants to stay longer than necessary. They finish it. It's essentially like one of those agile Scrum stand-up meetings where you're forced to kind of close it as soon as possible and get to the point. So it's become a bit more efficient, in my opinion, but then I'll leave it to each of you to give your experience. And these have obvious implications, I think, in terms of, well, what do we do about our real estate cost? Do we really need all of that physical office space in the long term if we're going to be, allowing some employees to work from home? Second, in terms of our IT spending, should we redirect our IT towards, enabling secure connections for work from home as well? And is that going to be a major part of our IT spending going forward? The third area I would like to maybe briefly touch upon, and I think it's relevant for all banks, is essentially the challenge for profitability. So in this environment we're looking at, governments are spending, governments are lowering interest rates, and that's a challenge for banks from an interest rate perspective and the net interest margin. So what are the changes we're seeing in our strategic plans with lower interest rates? Well, might be a topic that we might be able to discuss later. So let me start with the first question. Is it time to push reset, basically, on our strategic plan for 2020 or 2020 and beyond? I'm sure everybody had a very well thought through strategic plan that was developed through multiple meetings, stakeholders, probably consultants. A lot of money and time and effort was spent developing this. But now with this challenge, we're really facing a complete revamp possibly of the strategic plan, or at least reshuffling around priorities. So maybe I'll start with Tsanis. Tsanis, given your your business or your company is a subsidiary that's focused purely on digital channels. So maybe you can give your perspective both from the parent company as well as the digital only arm that's focused on retail. What has, at a very high level, what has changed in your strategic plan for the next few years, given the changes we've seen in the past couple months?
Many thanks, Mohsen. You mentioned a lot of relevant things that are happening, that have happened even in our bank. So the priorities have changed. I'll tell you one example. We were thinking previously already to stop having branches, and we were thinking to allocate their customer center, contact center employees. So to get rid of a couple of branches, for example, and have the customer center operations over there. Right now, even this priority has changed. So that goes to the real estate point you mentioned. But before going to specific examples, I will tell in a strategic level which are the changes. First of all, we are reallocating our budget on cybersecurity. That's because we really plan to have almost half of our workforce working from home within the next year or so. And that's because it ends up, as you told already, they are more efficient, they do their job better, they have a better work-life balance, and also lower operational cost for the bank. So the priority number one is we are shifting our budget towards cybersecurity. That involves a lot of, you mentioned more efficient VPN monitoring, more efficient, we don't want only endpoint monitoring, but across the whole journey of the users. Then also on the data side as well, we are implementing, we want to implement specific controls on the data that can be extracted remotely and so on. So the first shift is on the cybersecurity budget. The second shift is also on working from home for employees. Again, we see that it can happen, it is cheaper and it's more efficient and it makes the employees happier. So much more prepared to work from home, different budget allocation and so on. And the third area where we see a big change is the overall engagement with fintechs. So as you told already, we have the corporate arm, which is the traditional bank, and the digital arm. What we see, we expect that a lot of fintechs would have very good ideas. They will go bust. Essentially, COVID will impact the financial sector in multiple ways. However, in the bank, we prioritize a lot of fintechs. There are a lot of learnings from the fintechs and so on. So because a lot of fintechs will go off as the funding will go down, a lot of fintechs will go out of the game. So we plan to leverage talent and knowledge from fintechs to have stronger strategic partnerships, to build further the innovation culture, to accelerate innovation in the longer term. So these are the three areas where the budget changes, and it's our priority in the following few months. Thank you.
Okay, great. Thank you very much. And in fact, that's very aligned with what I'm seeing in the market as well. Danay, Lee, maybe you can give us perspective as well from CBI, and I understand you're much heavier focus on corporate banking, so I'd be very, very keen to know how the corporate side as well is changing in terms of your plans for the next few years.
Yeah, sure. Thank you. And Konstantinos, thanks for your response as well. Look, I've got a couple of responses to a few of the points that you brought up earlier. And look, I'll start with strategy. Look, frankly speaking, strategic plans are supposed to be, about purpose and about a longer-term aspirational plan for an organization and the value proposition that they provide to their community, to their customers. So whilst we certainly have an eye on our strategic plans as a bank and as an organization, ultimately what has really changed over the last 3 to 4 months has been much more focus around our execution and operational plans. The actual strategic plan and the strategic goal and the purpose of the organization hasn't necessarily changed an enormous amount. And that's a hallmark of a good strategy, in that you need to be able to reflect back on the strategy, but ultimately it should be able to have enough flex in it because of what you ultimately see as being your purpose. But really focused at the moment is the focus on the execution and operational plans of the organization. So no doubt, we are having those discussions about resource allocations this year, and how we support our customers and how we ultimately, continue to serve our community. Now, look, the bank is split roughly sort of 60% corporate, 40% retail at its current state. And, this goes for both corporate and retail. And we've talked, one of you mentioned channels a little bit earlier on. Ultimately, this idea of channels for me, whether it's a digital channel or a retail channel or whatever it might be, frankly, personally, and forgive me for saying this, but it's irrelevant. The customer is the channel. Ultimately, we need to be thinking about the customer being the primary channel, how they engage with an organization. That's up to them. So this idea that we only need to focus on a digital channel, or we only need to focus on, whether it's a branch network, it's irrelevant. And we see this in other industries. When we talk about the retail industry, they've always had this idea, or not always, but over the last 10 years, they've been focused on this idea of omni-channel. And they're also now moving more towards this idea of a harmonized channel. And, within the retail industry, that is very much about saying, we are not creating pipelines to the customer. The customer is the channel, and it's how they choose to access our services. So, Mohsen, you talked about your father who's now using digital banking on his mobile phone app, and that's changed. So, as an organization, we have to face into the fact that different customers are going to want to engage us in different ways, and we need to be able to provide, and at different times as well. So we need to be able to provide those opportunities for them. So our strategy remains largely intact, and we are flexing that strategy as we sort of need to throughout this year. And as we mentioned, some of this is about cost, and somebody mentioned a reduction in floor space. And look, for me, my early reaction back in February, March was, well, at some point in time, we may actually need to be giving away floor space, because ultimately we're going to be having more people working from home. But the more that we've worked through this process, and I'm not the person who's thought this process up, but ultimately people are thinking, actually, in some ways, when we will now may well need to consider two options. One, we might actually need more physical floor space, because when people do return to the office, if they do return to that sort of working environment, there will need to be social distancing incorporated into our office floor spaces. So typically, if a floor plate might have 100 people or 150 people on a floor plate, you are now going to need 2 floor plates to accommodate the same 150 people, because there's going to need to be more space between them. And another thing we may well see in order to mitigate risks is, rather than having a traditional centralized head office, having more of a hub and spoke office model. So for us, for example, in Dubai, instead of having one sort of central head office with 80% of our employees working in that office, we might have 6 distributed across Dubai, and that serves a number of purposes. Number one, it may well mean that individuals don't have to travel quite so far on public transport. And number two, it means that if we have any issues around COVID cases or outbreaks where we do need to close down an office for deep cleaning and sanitization, etc., they are isolated from each other, and we're able to mitigate that as best we can. And look, just to touch on one final point about the employees, one of the things we need to be conscious of is, we went through a sprint in the first 3 months of this year with COVID, and we're now entering the marathon. There is a general level of fatigue and exhaustion, and that's an emotional fatigue and exhaustion for our staff, and we need to do the best we can to help support them. People are scared. People are worried. Our staff are concerned not just about their jobs, but also about their family members, their husbands, their wives, their kids, their parents and parents-in-law, etc. And we need to face into that as leaders in an organization and help them through that process over the coming period of time. And yes, we need digital tools to help manage our staff, but ultimately banking is built on trust. The whole point of a bank and the whole relationship of banking is trust, but that also needs to extend to our staff as well. We need to trust them to manage their time, manage their workflow, and manage their responsibility towards the organization.
Great, very, very thorough. Thank you very much. So a couple of pointers I jotted down from your work. It was really a sprint, and now we're just beginning the marathon. That's a very, very good analogy, actually. It's, there's a lot of work to be done, and it's very, very true that employees have been fatigued. I mean, it's been a tough couple of months for everybody. So it's something to take into account. And that brings us to Ashley, who is directly involved with HR and employees. Ashley, how has this changed, at least from maybe if you have the broader perspective from the bank's strategic plans, but also maybe on the human resource organization and cultural aspect with work from home? Obviously, a lot of things change in terms of people interaction. The whole culture and values and harmony and synergy between the individuals maybe becomes better or worse. So maybe you give us a perspective of how you're looking at it from an organization culture and people aspect.
Sure. I'm actually really glad you phrased the question the way you did, because a lot of times when we look at work from home, what people think about is, do we have the technology we need to do this, right? Can people access their emails? Can they access the systems, the files required to do the task? And while that is one element of it, I think the culture piece is actually much more important. You know, to Danay's point, we've seen a sprint in the last few months as companies have scrambled to be able to allow people to work from home. And a lot of that is from the tech side. Some of the, you know, larger multinationals have been prepared for this for years, because if you have a workforce that's distributed across the world, you need to be able to have a lot of flexibility in that, whereas our regional and local players are now having to catch up quite quickly in terms of, you know, even the cybersecurity piece. You know, do we have the controls in place to allow this sensitive information outside of our four walls, you know, in the company? And even if we do have the technology, or we've managed to get that technology very, very quickly, the bigger piece is around culture. Are we as an organization prepared to let our employees work from home? And do we have a culture that enables them to do that effectively? And a lot of this comes with empowerment and trust, right? If we have an organization whose culture is one of micromanagement, of presenteeism, all of a sudden, when you work from home, all of the normal ways in which we would control a situation are no longer our option, right? So what are we doing to enable that? You know, we tend to forget that when we're hiring people, we're hiring adults with careers and experience, which we hope to leverage on. But as soon as they get in the door, we treat them like kids. You know, you're a minute past the start time. Where were you? You need to leave at 2 o'clock for a dentist appointment? No, you know, do it after work hours, right? And what we're seeing is that shift from, it's the dichotomy in HR. We've talked for so long around evaluating people by their objectives and their deliverables. How well did you prepare against the plan that we set out at the beginning of the year? Did you achieve this, yes or no? And we're going to determine your promotion, your salary increase, your bonus based on that. But we're still going to make sure that you're present when you need to be, and it's actually not based on. So we're going to ding you or give you penalties for things that actually don't contribute to the overall deliverable, but we're only going to reward you on the overall deliverable. And now we're faced with that. You know, it is about the deliverable. And are you performing? Are you responding to customer queries as required? Are you advancing on certain project deliverables that need to? And while we can start focusing on the culture, and a lot of companies are kind of had a rude awakening in this, you know, a point that was raised earlier really is about the well-being of our employees, right? It's a delicate balance, because while I don't think there's actual studies done yet to the extent of this, but hearsay is, yeah, productivity is going up. Employees are happier, right? You know, they don't have the miserable commute in the morning with getting ready and school drop-offs and everything that adds to the stress of the day. They can, you know, go in their pajamas, log in, and get started. But the flip side of that is we have people who are actually really stressed out, because while we've gotten a lot of benefits of reducing that commute, we have people who are balancing, you know, both working parents with kids doing distance learning. And if they're not independent learners, there's involvement. So actually now we are increasing the workload and increasing the stress load. Add to the point mentioned earlier about concern about job security and whether or not people can pay rent and whether they can access family members who may be ill or concerned about being ill, right? So there's a lot that we need to take into account and make sure that we do create the fine balance for our employees.
Great. So I think it's fairly clear. Any strategy without the human element is really just a piece of paper. So it's really important to take into account those factors. IT is extremely important, but the human element and the culture and the cohesiveness of that workforce is what essentially runs the engine. So it's quite important to have that sorted out. So that brings me to the organizational structure. Now, this is an interesting topic, I think, because we're used to, well, at least a traditional bank or the traditional organization is very hierarchical. We had plans, I assume, at least the banks that I've worked with, had plans of moving towards agile organizations and some sort of planned gradual shift, let's say, towards a more sort of non-hierarchical organization. But I think, and my hunch is, this past couple of months might have sort of given you second thoughts about how you want to do it, how fast you want to do it. Is that original time plan still relevant or not? Maybe I'll go back to, again, the HR expert, Ashley, if you can give us an idea in terms of the organizational side of it, organizational structure. Maybe give us a background how it was before, what your original plans were, and then how has it or has it not changed, or has it just been sped up? Go ahead.
Sure. And again, since the acquisition of DIB or by DIB, our plans definitely have shifted, as in our plans are no more. But theoretically speaking, what I can say is exactly what we said. Banks have historically been hierarchical, right? We love lots of different layers in the organization. The challenge with that, and why so many companies were trying to move away from that, is that it slows communication, and it actually slows our ability as an organization to affect change quickly and respond to our customers. There's just too many cogs that need to get moving. So the good news is that banks have been looking for a long time for the last few years, to become flatter, right? To speed this up, to become more agile, to become more flexible and able to respond to customer needs. You say, some of it has been slow and measured. I think I've also seen a little bit of, rip the Band-Aid off. Here's what we need to do to be effective, and let's just go ahead and do it, implement it. Yes, there'll be bumps and bruises along the way, but this is what we need to do. And if we look at the organization structure going forward, I think one of the key things that we're going to need to reevaluate is how we recruit and hire people, right? How do we attract the right level of talent? Because if we look at our employee value proposition, before that was quite different, right? Now the world has changed. What are the new concerns that people are having? Is it the ability to work from home? Is it that I have that option? I can go to the office once things open up and I can have that human interaction, or if I feel safer staying home to protect my family, can I also do that? What's the support given? Before, we know about medical insurance, and every company offers medical insurance, but not so many offered a well-being, programs, and to different extents, right? What support can I have? Because the stresses that our employees are being faced now are unprecedented. What are we doing to support them? What do they need? Another bit would be around the changes in adapting regulation. Right now in the UAE, we're here because we work. Right? Our company is our sponsor. But if we're going to be shifting the way we attract and hire talent, the location may no longer be an issue, right? So I can give a personal example. My daughter's in school. Her teacher's stuck in her home country, but she's delivering the education as though she were here in Dubai. So what happens if the world actually opens up for where we can attract talent from? A lot of companies are, we talked about the strategic plan at the beginning of the year. Manpower plan comes with that. Who will we need? What resources will we need in order to execute that plan effectively? A lot of those roles have been placed on hold. Or if the role is still critical, instead of doing a full-time role, it's now a 6-month contract, an 8-month contract, right? So if people are going for project-based work or contract, we're hiring people to complete a piece of work, and this goes back to deliverables, not a long-term role with, whatever may come up that year. How does that change the way we entice people to join our organization? How does that give us access to different levels of talent that we wouldn't have had access to before? And how will the local regulations support us in changing that employment framework so that we can hire them and we can get access to this talent? And lastly, it goes back to your real estate point. And actually, Danny, you had a great point. A lot of organizations have been speaking about reducing office space because a lot of people are going to be working from home. So what will the new world look like when we do have office meets? How will we bring people together? How will we create that sense of community, or has everything shifted online going forward? These are the different ways that companies now need to look into what it means for the organization structure.
Good. I actually, on that note, I think I saw an interview with the CEO of Cisco. It was a week back or so, and he was saying that while there's a trend globally towards less globalization in the products and physical goods, with this work from home, it looks like it's an opportunity for actually re-globalization on the services side and the actual staffing. So you can capture or attract very highly talented individuals that don't necessarily need to be physically in the country to coming to your office on many occasions. So that's a very good point. You're related to resource commitments now, whether that's human resources or physical assets or IT, and reprioritization of these resources is a topic I think that everybody is now thinking about. So maybe Danay, you can give us an idea about how you mentioned your real estate. On the easy answer is let's reduce real estate to save costs. But when you think about it, you're correct. What if we need to bring people together we need to actually have physical distancing between them, which means that we might actually need more square footage. Now, counter argument to that is because it's less dense square footage, actually the real estate costs and rentals might actually go down, which means we can probably fit larger real estate physical square footage with probably the same budget. My guess is, of course, you would be more knowledgeable about that. So can you give us an idea about how you're reevaluating the way you're committing resources and how you're prioritizing these going forward?
Yeah, sure. I mean, the reality is that our physical space cost allocation is actually a very small proportion of our overall expenses, really. I mean, at the end of the day, the floor plates we have is small. The real, and coming back to Ashley's point, I mean, the real core here is about our people. I mean, 60% of our costs, our direct costs, are related to, whether it be salaries or the other benefits that are associated with our employees. And really, thinking about our resource allocation is very much about thinking about how efficient we are in terms of supporting our staff through this particular period of time. So yes, we are of course looking and reevaluating our physical space requirements, and as I mentioned earlier, do we have a centralized location? Do we have distributed locations? Do we need as much physical space as we currently have? Do we need less? Do we need more? And these are all questions that we're trying to answer. And and bearing in mind, this is a problem that we've all had for 12 or 14 weeks. So it's still a very live topic, and we're all still trying to figure it out. And nobody by any means has the perfect answer at this stage. But certainly, there are projects that were supposed to be underway this year, which we definitely reprioritized. We're very much focused, as an organization in terms of meeting the requirements of the central bank, the requirements of the various regulatory bodies as a primary focus. Second, after that is ensuring that we are supporting our staff and allocating resources towards our staff in the right way to ensure their well-being, to ensure their mental state, to ensure their health and their ongoing ability to contribute not just to the organization, but to their families. And then the third piece, and it's not to, because I think they are all linked hand in hand, and it's not necessarily in order of priority, but the third piece is, we are prioritizing our resources towards the way in which we support and help our customers. At the end of the day, the bank is and most organizations are having a very difficult time, but I can assure you that the stress that I feel, that my CEO feels and our leadership team feels, is nothing compared to what our customers are feeling right now. The difficulties and the problems that they are facing and the challenges that they're facing from a pure cash flow perspective, from an ability to continue to drive and derive business, is absolutely immense. And I'm not sure that anybody on this panel, with all due respect, really has a firm understanding of how many sleepless nights these guys are having, and how stressful it is for our customers on the ground.
Okay, good. Sorry. So we've talked about the resource allocation. Maybe Konstantinos, you can give us an idea about how you guys are dealing with. And I know you're purely, well, mostly digital bank. So the aspect of real estate might not be a major factor in your decisions. But you do have resources on the IT and the human resource side. So how are you reshuffling these? You mentioned the cybersecurity aspect becoming much more prominent for the work from home environment, and then also data access and data security, who gets what when they're working from home. But overall, in terms of your resource allocation and what you prioritize other than those two elements, have things changed, or as mentioned before, it's more or less the same with some tweaks to them?
Look, agility was a priority already, both HR agility and both systems agility. The third point I mentioned earlier is also the innovation budget. As I told you, we are shifting the innovation budget we have as well. We are increasing it to be able to acquire whatever we can faster for cheaper. Okay, so in other words, beyond the two changes I mentioned already, we're accelerating innovation. This is on a strategy level. However, as you very well mentioned as well, is also a lot of Danay mentioned the credit comprehension that our customers are facing as well. A large amount of our cash flows and our reprioritization goes on extending our credit facility to our customers. 20% of our customers is actually oil and gas companies. And with the current oil and gas price, there will be a lot of market effects as well and so on. So as I told you earlier, we are prioritizing cybersecurity, digital transformation, acceleration. We are trying also to manage our customers, to extend credit lines, have better online credit lending facility, to try also to support governments on their initiatives. That's another element which is not mentioned so much. Like, we need to immediately offer digital platforms to help whatever the government targets are in different countries, and so on. Also, that brings a very high performance pressure in the company, which also creates an uncertainty to employees. And we haven't mentioned as well, like the uncertainty towards the job of the employees as well. So another area that we're trying to focus a lot on HR communications is to ensure that everything will be treated fairly and there will be no systemic issues out of control, hopefully as well. So these are, broadly speaking, more specific initiatives. Plus one more, we have already seen an SME opportunity in the market. And because the SMEs are among those who will feel the first pressure, we're trying, with the cash we have available, to accelerate in the SME market as well. So these are the specific areas that our budget reallocation is taking place. And again, in overall, I think that agility in systems, which is, I don't know what Ashley would say, for example, but in my, or also what Danay, what you mentioned, you're trying to create 6 different headquarters. I don't know if, to what extent, more disintegrated approach will help acceleration of digital transformation. In other words, right now, cultural building is very, very important. But we're speaking about being remote, being online, doing all these things. All these things will take 1 or 2 years to be implemented strictly, So I don't know what's happening like right now, in the next day, in July, in August. What are we doing? The physical space will take 1 year to happen. So right now, the main challenge that we are facing is how we can be agile while being disintegrated. And that's our current challenge.
Yeah. Maybe you guys, Ashley or Danay, do you want to give a response to that from your perspective?
Sure, I'll go. Over the last few months, I've had the opportunity to do a little bit of consulting work with different companies. And the key thing that they're focusing on is make sure the wheels don't fall off, right? Because I wish I had a nicer, answer, but right now that's actually it. Because there is still so much uncertainty, and there is the question of the reallocation of budgets. System transformations are expensive, right? Office space is expensive. Refurbing that is expensive, and choices need to be made. And once that choice is made, action takes time, to your point. And right now, we just need to focus on making sure our people are okay, because if our people aren't okay, our customers won't be okay, right? The same thing that we do looking at our customers, their wants, their needs, what can we do to help them, is the same level that I think most companies now are looking at their employees. What can we do to support people? So my answer, don't let the wheels fall off.
Danay, you have a, from your view, do you agree on that, or you have some additional points?
No, look, I agree with what both Ashley and Konstantinos have said. Definitely make sure the wheels don't fall off from a people perspective, and certainly within the bank, banks don't fail because of costs or budgets or strategy. They fail because of lack of liquidity. And so the wheels, the first wheel you really need to make sure is still on from a banking perspective is your liquidity, which is definitely the number one focus throughout this period of time. But certainly, I really like Ashley's point around our people, because, if our people are struggling, if they're falling over, if they're feeling really challenged, their ability to deliver empathetic customer service towards our customers is diminished, and then the whole system starts to break down, unfortunately.
Okay, well, I'm gonna, we have another 15 minutes, so I want to maybe give some time to the Q&A. There are a couple of questions, I think, waiting in the queue. But before we go to the questions, I think one of you, I forget who it was, mentioned the point of working with Fintechs. I believe it was Konstantinos, yes.
Yeah.
So is that something that it's in every digital transformation plan that I've seen with any bank or any telco involves something about working with the startup ecosystem, just as a sort of afterthought in many cases, and usually they don't really work very well. It's just a bureaucratic organization trying to work with a small, agile sort of startup. Do you guys, from the past 2 months, has that become more on the radar for the longer term, or is it still something decorative that we want to put on our plans, but we're not really giving it that much priority? So I'll just give you an example. Many Asian banks, Chinese and Korean, and I think in Hong Kong and Singapore as well, during the pandemic, they scrambled to work and integrate their services with e-commerce, grocery shop, online grocery stores, and various sort of digital ecosystem players, as well as fintechs in terms of payments, online payment platforms, etc., to be able to serve their customers where their customers have shifted their shopping and behaviors as well. So there's a lot more collaboration happening now in those banks in Asia that I've researched. Is that something that's happened yet, or do we think that it's becoming a priority, or no, not really in this region where we're still focused on the basics of making sure the engine is running and the wheels are not falling off, as you mentioned, and this aspect of digital ecosystem collaboration is still sort of in the long-term plans. I think Konstantinos made clear that it's a priority. Well, that's relatively clear from a digital-focused bank. But maybe from CBI's perspective and Noor Bank, are you guys looking at that in a different light now, or is it still the same plan as before? And maybe Danay, you can start.
Yeah, sure. Look, I mean, there's a lot in your question there, but I think ultimately being embedded within ecosystems is always it always creates a far deeper relationship with our customers. And I think coming back to the actual topic of this particular webinar in terms of strategic digital banking, is it time to hit reset? I think what the last 3 months has really exposed for a lot of traditional banks is that their efforts to become digital over the last 3 to 5 years is predominantly surface. It's just a wrapping around, very non-digital processes they have inside the organization. So once we've all now suddenly moved to a work from home environment, it's exposed the fact that these so-called digital offerings to our customers really still result in somebody being sent an email to then have to process, to then have to go through, another checking process before something else manually happens. But the customer thinks it's a digital solution, but in reality, it's often not. So, I think that's become really exposed over the last 3 or 4 months, where you do have these so-called digital processes that in fact are not. But I think that, what's happened in Asia is really an acceleration of what was already happening. What you saw with Alipay and WeChat, and their ability to integrate banking services in with other e-commerce platforms, and companies like Grab in Southeast Asia from Indonesia and Singapore were also integrating various financial service products into what they were doing as well. So there's a lot of crossover between the fintechs and some of these platforms. So I think that's accelerated over the last 3 months at a pace that we haven't seen here in the Middle East. But I think that's just because of a different level of maturity in terms of the fintech space and also the platform space in that particular market. But certainly this has created an opportunity for banks to think more broadly about how they engage the customer, and coming back to this idea about thinking about omni-channel and digital channels for our customers. It's really understanding that a customer is a channel, and at what point do they have a touch point with a banking or a financial type of service, and how will they engage you as an organization versus another fintech or another bank or another platform. And these are the challenging questions from a digital banking strategy going forward.
Good. All right, so let's. I'll try to allocate some time for the Q&A. There are several questions in the queue. I'll start sequentially from the first one we got. So the first one is addressed more to Konstantinos. It says, do you think digital banking strategies and implementations have become more developed or more advanced in your markets, in the markets you're focused on, as opposed to, let's say, a market like UAE, which is typically considered a bit more advanced for the Middle East and Africa region? How has it changed, or let's say leapfrogged in a way in your market?
Thanks, Mohsen, and thanks, Olukayode, for this question. Look, there is not a ranking system, which banking system is more advanced and technologically, and which less advanced. Of course, UAE is a pioneer in the Middle East, but indeed within Middle East and Africa, which is the markets that I have been covering and traveling, I would say that UAE is certainly moving faster. They have the infrastructure, they have the IFC that is creating, accelerator partnerships. Even in the topic of partnerships, I think that Noor block is working very close with Noor Bank, and all starts from the IFC discussions and Seesmic Bank as well. So in general, my response is that no, UAE is being quite ahead of the curve. They are moving much faster than Saudi, even though the market is bigger. The potential is much more to fruit. However, the question is how scalable it is. Indeed, for other types of solutions. For example, we launched the first digital bank in Nigeria. We have registered 2.2 million customers, retail customers. I mean, essentially, the more numbers bring us more skills and the ability to test different technologies. So to your question, Olukayode, yes, there is different levels of ecosystem development. Emerging countries bank from UAE or from Africa are ahead of the curve. And within the Middle East and Africa region, I think UAE is the most advanced, but also Kenya and Nigeria are moving, M-Pesa, for example, comes from Kenya, or other med tech solutions with finance combinations from West Africa. So in general, UAE is ahead, but in some cases, some other countries seem to be having very interesting innovations as well. Thank you.
Okay, thank you. That question was specifically to Tsanis, so we'll go on to the next question. The next question was, you mentioned working behavior and the traditional office environment is likely to be changed forever. But do you think the mass shift to digital in the consumer behavior will stick? Maybe we can start with Ashley. So obviously the work from home and the employee aspect is quite clear, but the behaviors in the consumers and my dad being so accustomed now to using a mobile application, is that going to stick around, do you think, or are we going back to the traditional way, hopefully after this pandemic is over? Or is this really created a seismic shift that is staying with us?
Actually, I don't think it's something new, to be honest. I think it's a journey that a lot of banks have been on already, right? You know, for a few years back, Noor was already talking about how do we reduce our branches? How do we, you know, shift a lot of the normal banking transactions online? You know, if we can have digital banks, why can't we be more digital? You know, we want to be a tech company with a banking license. So that journey has already been happening. In terms of whether the consumer shift will remain digital, I do think it will. You know, there's a convenience factor, right? We've gotten used to right now. So if there's something that I can do by clicking a few buttons on my phone or my watch, why do I need to hop in my car, go somewhere just to get the same thing that I could do within 20 seconds, right? So I don't think that's changing. What I do think I don't think physical interaction will be completely eradicated, because there are certain things where you want to have a conversation, and whether it's virtual, because, you know, we'll be talking over Zoom or Microsoft Teams instead of face-to-face in a branch somewhere. I do think that will continue, but we're going to continue on the trajectory that started already a few years back.
Yeah. Danay, what about you? I'm still very curious to get the corporate banking perspective on this. It's really a big question. Do corporate clients, considering that it's not one individual that usually makes these decisions at a corporate, how do you see that evolving after this sort of crisis?
Yeah, look, I mean, I think from a corporate customer's perspective, you know, they are also in a shift to more digital behavior that will stick longer term. But to Ashley's point, most corporates have been on that journey for quite some time. I mean, if you think about a corporate customer's cash management platforms, or the way in which they access things like trade financing, etc. You know, a lot of these things are already offered through digital platforms, and they access it through digital platforms. And, you know, and the larger corporates will have online treasury functions that they have an ability to manage their overall liquidity position across the globe. So these tools are already being put in place, but I certainly think what will happen is, you know, previously, you know, some of these tools were very expensive, and they were really only being offered by the very largest of the banking players. But I think now that expectation is cascading down into the smaller players as well, and we'll start to see those tools being offered by, you know, all banks of all sizes. So, look, it's similar to when, you know, I guess electric windows first appeared in cars. They were only in the highest model of the car, and then eventually every car now has electric windows, and it's the same concept or same idea. And I think that, you know, as the demands of the customer continue to say, well, we want to be able to do all of this stuff online, it's not just going to be wholly the preserve of the very largest and most well-funded banks and players. And I think that's where fintech is also helping to fill that space, is because they're commoditizing quite a number of these products, which were traditionally just for the very large global corporate banks, but they're now being commoditized to the point where effectively a bank like us, we can white label that product from the fintech and offer that as a service. And so I see that as being quite beneficial for a corporate banking customer. And I think they will continue to look for those tools. But one thing that I would point out is, you know, the real value for a corporate banking relationship is the relationship. So we will still need people who are able to act as true banking advisors, irrespective of the channel and within which they engage. They still need to be there to be a trusted advisor to our corporate banking customers and clients, because these guys are going to focus on what they're great at, which is whether it's trading or construction or engineering or whatever it might be. But they need the advice of a trusted banking advisor, and that's not going to change. The delivery of that may change, and the way in which they engage and access that information may change. But certainly that's where the real IP becomes for a bank and an organization, because everything else is going to become commoditized.
That's a very, very good point. Most of these technologies at some point eventually become a bread and butter. Everybody must have it. It's a must as opposed to a nice to have. But the relationship and the trust is what really keeps the customer longer term beyond these digital channels. There's one last question we have, maybe within the next 1 or 2 minutes, if we can address this last question. It says, thank you all for a great chat. One question for all of you is, how do you see the blend between reskilling, and we haven't talked about skilling and training, by the way, so that's a good question to ask, between reskilling existing staff for the changes ahead, and how much will be dependent on hiring new talent? And I think that's a good question to maybe direct to Ashley first. If you can look at the reskilling and of the existing employees and attracting new talent and the balance between those.
Sure. To start off, I don't have an answer as far as what that balance will be, because I don't know what jobs are coming, right? One of the things that we were doing is focusing on, say, 2 key areas. If we talk about upskilling or reskilling, one was on resilience. How can you increase colleagues' ability to bounce back and to adapt and roll with the flow, because we don't know what's coming in the future. And another piece was, it's about the growth mindset. It's learning to learn. A lot of time we'd learn a specific skill, but actually the act of learning, how can we embed that in the organization so that we're allowing people to learn, to fall, to fail, to learn, and keep people moving on that trajectory instead. I read a study, I think it was by 2030, 90% of jobs, we won't even know what those jobs are. They'll be brand new jobs, right? So 20 years ago, we didn't know what data scientists are. And now, every firm needs a data scientist and AI and some of the program. Those are all new things that didn't exist before. So if I say, how do we upskill people? Well, we don't know what skills they'll actually need. So if we tap into the foundation and give them the right foundation from which to grow, then we can do that. As far as hiring new talents, as I mentioned before, in the different ways we're going to attract talent. In a way, we get to tap into the gig economy, right? If we're going to be able to attract talent from around the globe for specific pieces of work, they may have those skills that we may not have internally. So I think those are the 2 different approaches we have. I'm not sure what the balance of that will be, but in order to get our workforce ready to be able to for whatever comes next, they need to be able to learn.
Yeah, good point. Danay or Konstantinos, do you have any inputs before? I think we've run a couple of minutes over time. So if you have any final thoughts on that particular aspect of the human element and training and reskilling or the new talent.
I do have. So, as mentioned earlier, we had the corporate banking arm, and we needed to start the retail banking arm. To do that, we created a separate unit, subsidiary, as you mentioned. We had a very different HR hiring policy for that. We didn't want bankers. We didn't want ties. We didn't want old people. We wanted programmers, data people, without focus on status quo, and more on, on being yourself, working agile, and so on. That serves to change the culture, okay? So, again, having executed upon that, having seen the impact that putting on a separate building, people that have to interact on same issues, you see the transformation, you see the changes in the culture. Right now, the banking industry challenge is the war banks versus fintechs, which offer superior customer product and thus have more preferences, but also the digital transformation acceleration. So I think these 2 different challenges you know, in terms of talent requirements and skilling, or you know, hiring new employees, I think reskilling is perhaps more expensive, and you know, doesn't offer programmatic skills, data skills, design thinking skills, and all these different things. So I expect a shift towards hiring younger talent, which have more tech skills, data skills, and are more, you know, not the typical banking employees. And actually that's, and again, that's not only because of the banks versus fintechs game, but also because of the acceleration of digital transformation. Yeah.
Good point. Danay, you have a couple of maybe thoughts before we close the panel?
Yeah, sure. I mean, I think I'm not sure if I'm considered an old person yet, but I definitely have some grey hair. But look, I think that you know, not every employee in an organization wants to reskill, but I certainly think that we need to, in the first instance, offer that opportunity to our existing people. And, you know, with all due respect, I don't think that that is limited by age or gender or experience or anything else. There are some people who really do want to reskill, who do want to learn new things. And, you know, I think from that perspective, you know, the future is going to be a blend of taking some of our existing people, reskilling them and giving them the tools. And to Ashley's point, not trying to create a new certificate or a box for them as part of their CV, but teaching them and providing them with the tools to continue to adapt and continue to learn in the future, because this space is going to continue to grow so much and change so much. But of course, I like Konstantinos's point about introducing people from outside of banking context. And because, you know, you do bring different life experiences, different corporate experiences, and different customer relationship experiences. And these can all be brought to bear in terms of thinking about how we deliver banking services in a different way. So I think it will be a blend. And I think, you know, introducing more people from outside of banking is going to be a positive thing as well.
Great. Thank you all for a very informative, I think, discussion, and for the participants for their questions that were very relevant. I think the main takeaways I had here is look, our strategic plans already took into account a lot of these things, but we kind of had them sort of nice, shiny, as Danay said, layer of nice looking concepts that were not really well, I think, maybe sped up. But now we're seeing that a lot of these initiatives that we initially had are becoming much more prioritized. The COVID-19 situation has made the human element, the cultural aspect, the IT, and the way we have relationships with customers really need to be rethought in terms of how we interact with them as well. But a lot of the strategic, let's say, value or vision, positioning we had with the client remains. We are still the trusted partner as a bank. We are still, relationship is still key, whether it's corporate or retail. So a lot of things remain the same, but a lot of the elements also need to be sped up or adjusted in the process. So with that, thank you all for your participation, and thank you the attendees for their questions, and have a nice day.
You too.
Thanks everybody.
Thank you. Thank you. Bye-bye.
Thanks, Mohsen.
Bye-bye.
And a huge
Thank
thanks
you.
to all of our panelists for joining. I hope you all enjoyed it. So that is the end of our webinar for today. The webinar will be accessible via our website for on-demand viewing. And if you have got any questions, please feel free to reach out to us via our website. We have a break in the series next week due to Eid, but we will be running the series again in June, so we hope to see you then. Thanks again.